Good evening, everybody. Webinar series which is organized by the Institute of Chartered Accountants of Sri Lanka. This is the second session, third day of audit and advanced audit and assurance. Mr. Sanjay Bandara will take place and will be continuing the session. Before that, I would like to invite Mr. Jagat Pera, Chairman Examination Committee, to speak few words on this.
Good evening. I think this is the third session we are working with you all. The primary idea is to support the students during the examination process. Normally we do the exams, we don't interact with the students to discuss certain examination related issues. So this process, what we are trying is to discuss with the students and find out how we could help the students during the examination process. There is about, say, 750 students normally sitting for auditing paper in a normal year, but the mock exam numbers are very less. Probably you may be thinking the mock exam may not have much value. The importance of mock exam or any other testing is basically for you to get more experience. If you don't come even for mock exam, my recommendation is to sit for 3 hours and try to answer for a paper that you have never ever seen. Because whatever you do, the next paper what you are going to get is unknown. There will be a lot of areas which you have never even thought of. Therefore, it's important for you to try a paper which you have not seen under the examination condition for 3 hours, so that you know how the pressure comes in, where you should start and what you should do and what you should not do. Especially the questions, basically most of the questions will come on essay type. So read exactly the point where the question is coming in and try to answer within that expectation, because sometimes the examiner put the question and you need to understand the question, and once you understand the question you read the sections and it will be better. Plus, when the examination time, don't think it is unusual, but you have to expect some unknown areas, but don't get excited on those. Take your time and think and answer what you can and what you know, so automatically you will be getting reasonable amount of marks. Another thing what we have noticed is the students are not attempting to all the questions, and it is a must during the period you should try all the questions. It's not out of, say, 5 questions, if you answer 3 questions, I am sure it will be very hard for you to get through the exam. So you need to attempt to all total number of questions, even though if you have not completed the question. Like that, there are certain things that you maintain while you are doing the exam, so that easy to pass. And maybe you may not accept, but we do not restrict the number that is getting passed. Anyone who gets 50 marks will get through the exams. There is no question of we restrict the numbers. And you will know now by looking at your results, because we give the breakdown of marks. So each question, how many marks you have taken is also disclosed. So there is no question of that we do not or we do restrict anything. We never do it. We always try to get the maximum, give the maximum benefit to the student. Even if it is a difficult question paper, we still look at it, and we get the examiners to review some of the answers more than one time in certain times to make sure we are giving the right amount of marks. Okay, I don't take time. Maybe Sanjay will explain more about the question paper and the related areas of the subject. So take maximum benefit of this and tell your friends also to, if they are not come for the mock exam, at least to get the paper and answer. If they are not seen this series, at least to go to the web and look at those, so that they will get a better advantage of this whole process. Thank you.
Thank you. Thank you, Jagat. Good evening. So today we'll discuss, today we'll basically start from where we stopped last Friday. Since Jagat explained you all a couple of exam secrets kind of, right? I also thought of, so giving you all 1 or 2 points where actually I forgot to tell you all on the first workshop. This question paper normally carries 5 questions. The first question normally carries about 30 to 35 marks. So therefore, what I think or what I feel, right? So if you all can get some say more than 20 marks for the first question, right? Out of 30-35, if you can get more than 20 questions, 20 marks in your first question, so I strongly believe that your ability of getting through the examination is very high, right? Because for example, 20-25 marks out of 35, so then basically core of ethics questions generally students take about generally take about 70 to 80% of the marks. If 15 marks are allocated for that question, you can get about easily another 10-12 marks, and then altogether 25, another 12, 37. Likewise, so getting 50 marks required is not that difficult, right? So therefore, ensure that the first question, not that so you all should do only the first question well, right? I mean, what I'm asking is, right? First question, if you all can get more than 20 marks, your ability or your possibility of getting into exam is very high. So therefore, ensure that so give more focus or more attention on the first question, because in the last few examinations, if you will go to the first question, appears to be very easy also, right? So therefore, give more focus or more attention on that one. Second one, once you all get the paper, so take about 10 to 15 minutes, maybe 10 minutes, right? The paper is given, I think, 10 minutes before the exam, no? Right? So therefore, take that 10 minutes or maybe another 5 minutes from your own time and read the question paper, right? Read the question paper and then prioritize, right? So this is the question I'm going to answer first, this is a question I'm going to answer second, this is a third. Because, what I've seen, what I've heard, right? Say some students were telling me, okay, look here, sir, I started with the first question and the second one, third one, and I could answer only 3 questions. Fourth and fifth questions I couldn't answer, right? But later on I realized that the fourth question was, or a fifth question was much easier than the question number 1, or question number 2, or the question number 3, right? If the particular student read the question paper, that would have been identified right at the beginning. Say for example, if the question 5 is very easy, if you are very confident of the question number 5, obviously that particular question will have to be answered first. For example, if 15 marks are allocated for that question, if you can get, for example, not the entire 15, maybe 12 marks or a 13 mark for that question, you know that you are very confident and comfortable on the areas tested in that question. So you all should answer that particular question first, right? And then identify the second question. Likewise, you all prioritize the question. This question first. This is the second question you are going to answer. This is the third question you are going to answer. Likewise, prioritize and then answer in that particular format. So that will ensure that you all will easily reach the 50% pass mark, right? So without having much difficulties, right? So therefore, please note that also, right? And give more focus on the question number 1, because getting fairly big amount of marks for that particular question, will be really helpful for you all to get through the examination, right? Today, so I did some slides for you all, right? Just to ensure that some of these matters, basically to remind you all under some of the matters and then highlight some of the very important matters I think, right? So will be of quite useful for you all. I will basically discuss the practical aspect. I will not discuss each and everything, but whatever, I have not documented each and everything under each and every topic that are coming here, but I have stipulated or I have documented all important matters, important factors that has to come under given topic. So therefore, I'll basically explain you this particular document, content of this particular document in practical context, right? Now, if you want, no need to write it down. If you want this particular document, I can give it to you all. I mean, we can share it with you all. I mean, there's no issue about it, right? And the last week I said that, you know, this ethics for the accountants, especially we discussed about the ethics for the accountants applicable in, ethics applicable for the accountants in business, not the accountants in practice, right? But again, just thought of, you know, taking you all through the ethics applicable for the accountants in practice as well. Just to refresh your knowledge on that and then get into the ethics for the accountants in business, right? And then as far as the ethics for the accountants in practice is concerned, now you all know the basic principles. We discussed last week as well. The basic principles they got to comply with, and then you all know the threats for the compliance as well, like, you know, independence and all that. So therefore, now here what I am going to discuss is the ethical safeguards for the accountants in practice. What are the safeguards available for the accountants in practice? You all know, probably you all are very confident on this, but again I will quickly go through them. Some of these the safeguards are created by the profession or the legislation itself, right? And some of the professions are created by the firms' own systems and the procedure. Now there's an issue, right? If there's an issue, now our profession or certain regulations have created or established some safeguard for us. In addition to that, a particular organization where the particular member is working, they may have established their own policies and procedures to ensure that, you know, the particular ethical issue is resolved in an appropriate manner. So basically there are two. Now we'll quickly go through some of these safeguards. First one is created by profession. What are the safeguards created by the profession, right? First one, for example, training and experience requirement for entry into profession. So when you enter into the profession, right, training or the experience, you know, the training or experience they have stipulated. For example, profession has stipulated some sort of a training or experience relating to ethical practices is required for you to get the membership, right? For you to get the membership. For example, our institute is also considering, right, similar mechanism. Now if you all take, for example, England and Wales, now there's a mechanism of this particular nature, right? The students who complete the examination, they have to do, if I can remember, 40 hours of online module, right? 30 or 40 hours of online module, right? I can't exactly remember what it was. It's like a module on ethics, right? Now there's the sort of a software where some questions are there, right? The students will have to, those pass finalists will have to go through the questions, right? And some of the ethical issues are stipulated there, and they will have to compile an answer, right? How to address or how to resolve the particular issue, right? So therefore, that kind of, right? Maybe the training, that may be a practical training, right? Maybe other kind of an experience or online module training kind of a thing, right? Can be introduced, so before the membership being offered, so that, you know, those members are well aware of ethical principles applicable for them and how to deal with. Because what matters is, now most of us, we all know what the ethical practices, what the ethical principles we got to adhere to. But again, you know, sometimes they might, the members might find it difficult to identify the threats, right? So whenever you identify a threat, how to address it. So therefore, some sort of a practical experience will be really helpful. One is to identify. Second one is, once it is identified, how to deal with it, right? How to most appropriately address it, how to most appropriately resolve the particular issue. Therefore, that is why this kind of a training or experience is really required. So some profession, I mean, some institutions have already established that. So that is a good sort of a, this thing the profession can introduce. Second one is CPD, continuing professional development requirements, right? Now example, so the mechanism of CPD can be introduced. Even after getting your membership, the particular institution can ensure, or the institution can introduce. For example, CS Sri Lanka can introduce, all members will have to have minimum. For example, 10 hours of experience for a year on application of ethical principles, or a 10 hours of training on ethics, right? So therefore, if that kind of an arrangement is there, not only right at the beginning before getting the membership, even after getting the membership, every year a training or proper training. For example, like the practical training we get during our training period. So it goes on to say that, you know, the kind of a training, 10 hour or 5 hour training is required every year, so that whenever you renew the membership, you produce that document to the institute, so that institute will renew your membership, right? So that will also be very helpful for the members, to refresh themselves, right, on their ethical obligations, right, how to resolve, etc., etc. So therefore, second thing is, so they can introduce a mechanism of this nature. Third one is corporate governance regulations, right? As you all know, through corporate governance regulations also, now certain requirements have been stipulated. For example, some committees will have to be there, this is how you have to handle certain things, right? So have been introduced. At the moment it's not mandatory, but whenever you comply with the corporate governance requirement, that will also be helpful for you all to comply with the ethical requirements of the profession. Finally, professional or the regulation monitoring. For example, now our institute has started, checking the quality control, right? So we have started a mechanism of recently introduced a quality control of, say, audit working papers. The practices, right? So one aspect is, the institute will check the audit firms or the audit practices. So whether they are managing their affairs the way they should manage, right? Whether they are conducting audit based on the Sri Lanka auditing standard kind of a regulation, kind of arrangement, or we have started. So therefore, if there's an arrangement like this, right? So whenever institute goes and review the firms, so they will check and see whether the particular firm or the particular partner maintain, for example, independence, right? So objectivity, integrity, and those kind of things will be checked, right? So therefore, if there's a professional or regulation monitoring is there, that will also be helpful for the members, right? It will be really helpful for the members to ensure that, so they will comply with the ethical principles or the guidelines they should comply with. So therefore, these are some of the examples created by the profession to ensure that the members comply with the relevant requirements. This is what will be really useful. The examinable in the examination, right? More than the one stipulated in the profession of the regulation, the firm's own procedures. What are the procedures? The firm, right? Firm can establish, or a firm establish to ensure that they are in compliance with the ethical rules and regulations applicable. Ethical rules and regulations applicable. First one, firm's leadership stressing the compliance with fundamental principles, right? So leadership of the firm, leader, maybe the senior part of the firm, right? He regularly stressed the importance of, right, compliance with the applicable ethical requirements. For example, when the senior partner keeps on regularly reminding the other partners and employees, so you have to be independent and you have to maintain the integrity and etc., etc. So it will be really helpful, right? It will be really helpful for all the members and all staff members in the firm to ensure that they maintain the relevant ethical principles and the regulations. Second one, quality control policies and procedures. Not only by the institute, even some of the firms, right? Most of the firms, right? So they do have their own quality control mechanisms and the procedures. Your firm is, for example, before accepting an audit, for example, the firm will check whether the firm is independent to handle that particular audit, whether the firm is having the required competencies or the skills. Now, we'll have to, for example, before undertaking an audit, firm will have to see whether they are having the required expertise, right, experience, and the staff, etc. Firm will have to check, right? So therefore, if there's a mechanism, whether they are independent, right? So if there's a mechanism established within the organization under quality control policies and procedures, right, that will be really helpful, because then the firm will not, the firm will basically comply with the ethical principle that they should comply with. Because the quality control policies and procedures should have been developed, take into consideration all these ethical principles stipulated by the institute. So therefore, most of the firms are having, right, now you all can suggest, for example, in the examination, if a question is being asked on this particular area, right, referring to a firm, you all can say that, okay, firm, it requires the firm to introduce the relevant quality control policies and procedures, so that, so that the one aspect is employees or the partners or the members will ensure that they will comply with it, right. Second one is when there's a mechanism like this, right, so whenever there's an ethical issue, right, firm can ensure that, those are being properly identified, evaluated, and then addressed. So that is why, so having this one is really important. Now third one and fourth one also connected with that one. Document policies on identification, evaluation of threats, identification and application of safeguards. As far as the firms are concerned, firm will have to document, right? If the firm has documented, right, policies and procedures of identification of threats, how are we going to identify the threats? Once a threat is identified, how are we going to resolve it? Because if it is not documented, what will happen? Nobody knows how to identify the threats. Nobody knows probably how to resolve. So therefore, it's very important. Now, if you are having the policies and procedures, those should have been documented. Therefore, there's a set program. There's a set program within the firm as to how to identify the threats and how to address them. The fourth one, there again is a very important aspect. The document policies covering independence threats, right? So the independence is a very important ethical the principle. So we'll have to comply with. So therefore, there again you document the policies covering independence threats and safeguards. Fifth one, use different teams for non-assurance work. Most of the time, what happens is, if you use the same team, right, use for the assurance work as well as the non-assurance work, there is a possibility of what, right? Now, for example, non-assurance work, you perform the non-assurance work also, right? Same team is being used to provide the assurance work also, right? When the same team provide the non-assurance work and assurance work both together, what will happen? There will be a self-review thread, because for example, I might compile the financial statement, I myself might audit the same financial statement. So therefore, we are subject to self-review thread. So therefore, that is why it goes on to say that, okay, so if by any chance, so you have to or you had to undertake the assignment of this nature, so what we can do is, you have different teams. As far as the non-assurance work is concerned, you have different teams for the non-assurance work. Finally, timely communication of policies and procedures. So what we can do is, whenever, so we have now, so for example, we have established policies and procedures, how to identify, how to resolve and all that. So whenever we have a policy and procedure like this, we can communicate, right? We can communicate to our membership, right? We can communicate to the members of the organization that, okay, these are the policies and procedures available for us to identify the threats, right? So this is how we are going to address them. Kind of a communication will have to be done immediately so that all employees or all members of the organization are well aware of the mechanism and well aware of how to address them. That will be really useful for us to resolve them without a issue. Okay, now safeguards relating to special assignment. Now this is again, I think that is an examinable area, safeguard relating to a specific assignment, engagement. For example, audit of say XYZ Limited, right? Now we have identified an assignment. What are the quality control procedures or the policies that can be implemented in respect of an individual assignment, right? First one is involve an additional professional accountant to review work. For example, I might be the engagement partner, right? So in addition to myself, for example, I will appoint him also, another partner, right? Another partner also to review the particular the work, right? I myself will be the engagement partner. You get another partner also involved, right? In reviewing the work done by me or the reviewing the work done by the staff members of the firm. So therefore, the work done is being reviewed by two accountants or the two partners. So therefore, so the risk can be minimized to a very great extent. Rotating the senior personnel. Now what happens is, most of the time, so we are very comfortable with working with for example, if for example A did the audit of XYZ Limited in the previous year, now we are very comfortable to take the same staff member to do the audit of the entity in the current financial period as well, right? Maybe the next financial period as well. So there what it says is, if possible, as much as possible, rotate the senior persons involved in the particular audit or the assignment. For example, if the A did the audit in this year and you get some other person to do the audit in the second year, you get another person to do the audit in the third year, right? So without getting the same persons or the same senior officers involved in auditing or handling the particular assignment, you rotate the senior persons, rotating will be really useful, not only the partner, even the senior staff members rotating will also be quite useful. Consultant, independent, third party, right? So in the event you need, for example, some the consultancy, right, or some help, so you will have to see whether you need to consult, right? There can be certain circumstances where, for example, on an expert valuation, that expert valuation value sitting on the balance sheet or the statement of financial position of your client. Now there is a doubt, right, or there is a sort of a inconsistency, sort of a gray area. So where you might take a call, okay, so better to consult an independent third party as to how to deal with it, right? There is an issue pertaining, there is an ethical issue, for example, there is an ethical issue, right, pertaining to a particular assignment being handled. So therefore, what we can do is he can consider, auditor can consider, the member can consider to consult another third party to get his own opinion as to how to address the particular issue. Third one is discuss ethical issues with those in charge of client's governance. That most of the time, right, those in charge of client governance is the board of directors. Most of the time, those in charge of client governance refer to the board of directors, right? If there is an ethical issue, what he says is, okay, so why don't you discuss with the board of directors of the particular company, or why don't you discuss it with the management of the particular company, right? What he says is, okay, discuss with them, so you will be able to end up, you will be able to resolve it in the appropriate manner. So therefore, discuss it with the board of directors and resolve, because there can be certain circumstances where you will be able to resolve some of these ethical issues by having a discussion with the management. So that is why it goes on to say that discuss it with the management. Finally, involve another firm to perform or the re-perform part of the engagement, right? There can be very extreme rare circumstances where you might get the support of another firm, right? Another firm to perform part of the engagement. For example, assume that so you are auditing, say you are auditing the financial statement of an entity, right? As if you are auditing the financial statement of an entity where they had a branch in, for example, Kilinochchi. Now, our access then, for example, prior to 2009, our access, we did not have an access to the records maintained there at Kilinochchi, during that particular time. But there are a couple of firms practicing there, right? So what the firm in Colombo could have done is, okay, they could have get the particular firm operating there to review whatever the records maintained at branch there, right, Kilinochchi, and report back to the firm in, it's not that, for example, our firm, so we don't have a branch in Kilinochchi, but your client is having a branch or whatever outlet there in Kilinochchi. So you need to see some of the records maintained there, but you can't go there. So there what you do is, there is a firm there, they are having a office there. So what you can do is you can get them to go and review the document and report to you, right? So that you can rely on. You have to consider there again independence, objectivity, scope of work, and all that. Having considered all that, if all are okay, then you can go by the work done by them, and then that will be quite useful for you to resolve the particular issue. So therefore, now these are the safeguards relating to specific assignment. As far as an individual or a specific assignment is concerned, if there is an ethical issue, how to handle it. Rotate the partner or get another partner to, for example, rotating. Now in this particular case, rotating will not basically, right, because the one assignment, right, this year if there is an issue, rotating will have to happen in the next year, right? So if there is an issue pertaining to an assignment in this year, the first thing what you got to do is get another partner or get another director to come and review it, so that particular problem could be resolved. Second one is, okay, the rotate your persons on a regular basis and all that. So therefore, now these are some of the steps that could be taken to address the safeguards, the relating to an specific assignment. Okay, this is the question that I asked from you all last Friday, right? Ethical threats to compliance for accountants in business. I said that you all are aware, you all are well aware of the threats applicable for the accountants in practice, right? The accountant in business, right? These threats are equally applicable, I said, for the accountants in business as well. That means accountants in the corporate world, right? I explain you all one or two. The first one is, I said self-interest, right? The accountant might be having a self-interest threat. What does it mean? I said, for example, I explain you all this one. Now, for example, if the accountants or if senior managers, if directors are paid a bonus or an incentive based on the profit. Directors are paid a incentive or a bonus based on the profit. Now, there is a possibility where, I mean, the accountant, now if the accountant or the finance director is paid a bonus on the profit or an incentive on the profit, so obviously director or the accountant want a higher profit or lower profit? He want a higher profit. So therefore, when he wants a higher profit, you know, so then his this one is being threatened, right? For example, he want a higher profit, he might look for a, you know, always to have a higher profit in the financial statements. Say the incentive based on the profit, right? Second one, for example, he might have taken a loan from the company, right? So therefore, you know, these are some of the examples where, you know, I have a self-interest threat, right? I have a self-interest. For example, in this particular case, one other thing is, say, I own shares of this company, right? I am, for example, finance controller of X Limited. I own some shares of X Limited, right? I own shares of X Limited, right? So I know that if the earnings per share, profit of the company goes up, what about the market price per share? Market price per share goes up. If the market price per share goes up, what will happen to the amount of profit I am getting by selling my shares or whatever the wealth I am having, right? So in investing equity shares of this company goes up. So therefore, there is a possibility where if the particular accountant is having equity shares, if he has invested in equity shares of that company, he might want a higher profit because he knows that when the profit goes up, earning per share goes up, market value goes up, he get a better profit, his wealth increase, right? So therefore, so they all come under self-interest threat. You have taken a loan or you have invested in equity shares, right? You have you are getting a profit, you are getting bonus or an incentive on the profit. All these cases he wanted a higher profit, right? Higher profit. So therefore, this one is being threatened. Second one is self-review. So which I explain you all. Now, CFO or the finance director takes some, you know, decisions, some business decisions. But ultimately, he himself reviewed the appropriateness of the decisions taken. I gave a couple of examples last time, right? So you take some decisions, right? Based on decisions, ultimately you are the person who will review the appropriateness of the decisions taken, right? So you will end up with a self-review threat. Third one is advocacy, right? We said that, you know, so you justify. Now he gave us a, you know, good example also, right? Say, so you justify, right? For example, some information is being presented by the client or by your own organization to somebody, maybe to a bank, maybe to another entity, right? So without really, without a proper rationale, right? Without a proper rationale, without a proper reason, without a valid reason, so you justify the information submitted by your own organization. For example, they are given a forecasted profit of next year. Now to get a loan or whatever it is, now the bank was asked, you have submitted application for a loan from a bank, facility from a bank. Now the bank wanted you to submit a forecasted financial statement for the next financial period, right? Now the forecasted financial statement have been prepared and submitted. Now the bank says that okay, so bank can't you know, accept this one because highly inflated and all that. But again, so having known the fact that, you know, the financial statement prepared or the financial statement forecasted for the next year is not justifiable when you compare with your performance in the last so many years. Now last so many years you have performed, you know, to a certain level, right? Now for the next financial period, the forecast you have done is, you know, sort of highly inflated. So therefore, now for example, all these years up to last year you have earned a profit of average 100 million rupees. Now for the next financial period, in the forecast you have done, you are forecasted to earn a profit of 500 million rupees, right? Now being an accountant or a CFO, you are well aware of the fact that you will not be able to achieve it because last many years, you know, it was 100 million rupees, and so there has been no change, no significant change or the improvement in the circumstances or the demand for the product you are producing and selling. There has been no significant demand or the improvement. for the product of manufacturing and selling. If there will be no significant change in the economic conditions or the circumstances, possibility of getting 500 million is very remote. But having known all that, being a director or finance director or the accountant, you are going to justify, right? Justify, you substantiate the forecast done, right? So therefore, it comes under advocacy trait. Then the familiarity, long outstanding. Now this, it's a very simple one, long association of business contract. The final one, intimidation, right? So intimidation, so you advise, okay, if you don't do this, right, you have been sacked from the finance controller position from today onwards. Don't come to work from tomorrow, right? Can happen. Can happen. For example, director might suggest, okay, do this, okay, do that. So we'll adjust, this in this particular form, or etc., etc. But again, you being a professional accountant, right? So you say that, okay, no, I can't do this. In which case, the director says that, okay, if you can't do that, okay, so give your resignation, right? So kind of thing can happen. So therefore, it amounts to intimidation. Therefore, now these are the normal threats, as you all know, applicable for accountants in practice. But what we should know is, so these are equally applicable for accountants in business as well. Here I have given you all some example where these are applicable for the accountants in business. Now for them also, right? Now earlier I said that the accountants in practice, there are some ethical safeguards available in the firm or in the particular the audit firm itself, right? Now if you all take the accountants in business, now the accountants in business also, there can be some safeguards available within the particular organization. Now earlier I said that there are two types of safeguards available. One is the safeguard established by the profession. As far as the safeguard established by the profession is concerned, that is equally available for the members in practice as well as members in the business, right? Now then we discuss what are the special safeguards available for the members in practice. Those are the basic safeguards established within the particular firm itself, right? Now here, so the safeguards can be different to the safeguards established by the other business organizations where all these the accountants and other business leaders are working. So therefore here what I am going to discuss is what are the safeguards that can be established, right? That can be established in the corporate organization, right? Ethical safeguards available in the workplace. Now if you take a corporate organization, what are the safeguards that can be introduced? One is the employers' ethics and conduct programs, right? Now there can be certain organizations, for example in Sri Lanka there are certain organizations, they do regularly conduct, right? So the ethics and they do regularly conduct certain programs. They have certain ethical principles within which they are working. They regularly conduct programs to ensure that so the members or the employees working in the organization are well aware of the ethical principles, right, applicable for them, not only for the accountants. Certain organization may be having their own ethical principles, rules and regulations, no? Right? Here what it says is the particular organization is having certain ethical rules and regulations applicable, certain ethical principles and regulations applicable, right? Like audit firm has established some ethical the framework within which they are operating. The particular business organization may also have established certain ethical framework within which they are operating. Now this refers to that. Second one is recruitment procedures. What does it mean? Whenever you recruit employees, right? Whenever you recruit employees, one is, right, you check on their ethical background. What you can do is you check their ethical background. You can refer to the former employers and you can check the ethical background. Second one is whenever employees are recruited, they are being given a proper training on the ethical principles they got to comply with whenever they are working in the business organization. For example, as you know, most of the audit firms, whenever trainees are recruited, before they are put into basically work, they are being given a training, right? One aspect of the training is ethical principles applicable for them. Similarly, some of the other corporate organizations also, whenever they are recruited, one aspect is their ethical background is being checked. Second one is before they are put into the employment, they are being given a training on the ethical principles and the regulations applicable for the employees working in that particular organization. So therefore, these can be done, right? One other safeguard available. Third one is strong internal control. You establish a strong internal control where the ethics, whatever the relevant ethical principles are also inbuilt into the internal control. They are having a strong internal control, so that could act as a ethical safeguard. Then appropriate disciplinary processes, right? Leadership that stresses ethics, training and education programs, and whistleblowing provisions. Now, whistleblowing provision, most of the listed companies nowadays have established the whistleblowing provision where, right, whenever there is something, some maybe unethical act or unethical behavior or unethical transaction, so immediately you can, there is a mechanism established where you can immediately report. For example, most of the listed companies, now the procedure established is such that you got to immediately report to the chairman of the audit committee. Now, I think you all are aware that is the established process is, so whistleblowing policy established. For example, it can be a, say for example, special say telephone number, right? So if you identify an unethical, if you come across an unethical transaction or a unethical act or kind of a thing, right? There's a special, for example, telephone number, right? So where you got to immediately dial it and report, right? So basically the number given can be a chairman of the audit committee. It might not be the managing director or the chairman, right? Chairman of the audit committee, most of the time chairman of the audit committee is an independent non-executive director. So therefore you report immediately to the chairman of the audit committee. He will address it appropriately, right? So so there can be a separate the letterbox organized. Whenever you come across an unethical act or a transaction kind of a thing, you record it and go and put it to the particular letterbox, or there's a separate email address is been given where you immediately put a email and the recipient will be, for example, chairman of the audit committee. So therefore whistleblowing policies, right, are there basically to address them, right? So address them, so like a training and education program. Training and education programs are regularly held so that the all employees are well aware of the ethical principles and regulations. Therefore, these are kind of safeguards available for the accountants in business, right, in their workplace to ensure that they comply with the relevant principles, right. Now, ethics for the accountants in business, right. Now, so here highlighted, now these are basically in mostly in practical point of view, circumstances where the accountants in business, right, so will find it difficult to perform their duties in the ethical manner, right. Now, identified 4 circumstances, 4 to 5 circumstances. One is conflict between employment and professional obligation. What does it mean? Now, these are the circumstances where, for example, examiner can probably test you all on, giving an example of this particular nature, right? What does it mean? For example, as far as the code of ethics is concerned, now whenever you undertake, whenever you accept a position as an accountant of a business organization or a CFO or a finance manager, you have to support the legitimate acts and events of the organization. All legitimate ones, right? All legitimate, the transactions, acts and events of the organization will have to be supported, and you have to support the organization, right? And you have to do a proper job, right? So that is required by the code of ethics. But now what happens is, the code in one aspect goes on to say that all legitimate actions will have to be supported, right? But now here what I am referring to is conflict between the employment and professional obligation, right? Now your employer says, okay, now acting contrary to law, regulation or the professional standard, right? Now your employer wants you to do some adjustment which is contrary to law, right? So do something which is contrary to law, right, or which is contrary to regulation, right? Now as far as the employer is concerned, employer wanted you to do that, but as far as the code of ethics is concerned or the profession is concerned, profession doesn't want you to do it, right? So these are the circumstances where the accountants in business find it difficult to, right, comply with the relevant ethical principles and the regulations, right? So because what it says is, as far the all legitimate transactions are concerned, you have to support. But there can be certain, the certain instructions where, the management might want you to act contrary to law, right, or the regulations, right. So you have to do that, otherwise what happens is you might lose your employment, right. On the other hand, if you do that, what will happen, right, you are not in compliance with the ethical rules and regulations applicable for the entity, right. Second one, misleading auditors and regulators, right. Now there can be some managing director might want, so there had been so for example, there was a suspicious transaction, or there was something which is obviously wrong, which is obviously not acceptable or not correct. But what the managing director or the board of directors want you to, for example, tell something which is not correct to the auditors, or tell something which is not correct to the, for example, regulator. It can be, for example, in the revenue, or it can be any other regulatory agency where the directors want you to tell something, something which is not correct, right. So therefore, now you are in a, as far as the particular accountant is concerned, now if he doesn't do that, what will happen? He will lose his job, right. If he does it, what will happen? He is not in compliance with the relevant ethical rules and regulations applicable for him. Practical example, right, so where the accountants find it difficult to follow this, the ethical principles. Third one, issuing or being associated with a report that misrepresent facts. First one is you are issuing a report which basically that misrepresent facts. You are issuing a report that misrepresent facts. Right. Second one, you don't issue a report, but you are being associated with a particular report that misrepresent. You compile having known that, for example, previous example I gave you all, right. Now bank wanted you to forecast the prepare the forecasted P&L for the next year, right. Now so having the directors now you know that, or the directors have informed you that unless you have a 500 million profit, you won't get the particular facility. So therefore, having known that you can't achieve 500 million profit for the next year, you still compile set of financial statement which will have a profit of 500 million rupees. Right. So therefore, now in that particular case, what happens is you issue a report, right, so which doesn't contain the actual information, correct information. Sometimes you might not compile it, but you might be a part of the particular report or the process, so which issues a report which is not appropriate or which is not correct. So therefore, this is a one where conflict between employment and professional obligation, right. Employment require you to, employer require you to do all that. But if the employer, if you don't do that, but in all these circumstances, if you go by the code, you can't do that, because it's not, you are not professional, you are not independent and all that. So but if you don't do that, you will lose your employment. If you do that, what happens is you are not in compliance with the relevant ethical rules and regulations. This is a one scenario where the accountant find it difficult to cope up with the relevant ethics applicable for him. Second one is the preparation and reporting information. As you all know that the accountants are basically responsible for recording the transaction and finally compiling set of financial statement and providing financial information to the stakeholders, right. Now here what happens is accountant should not be associated with misleading information, right. May not be associated with misleading information and may seek legal advice or report to appropriate authorities, right. For example, like this year you have a profit of, you compile your financial statement, you have profit of 100 million rupees, but the directors wanted a profit of 500 million rupees. They wanted you to compile a set of financial statement which carries a profit of 500 million rupees. Now what happens, because being the accountant, you are responsible to the prepare and present the financial statement, but the financial statement will have to carry the actual information. But in this particular case, directors want you to compile set of account which carries 500 million rupees of profit, right. So there what he says is the accountant should not be associated with misleading information, right. So and if by any chance so they insist you to do that, now what it says is better to seek legal advice or report to the appropriate authorities the fact that the information presented here is not correct or not accurate. Third one is acting with sufficient expertise. So what is really required is, what the code requires is, so we should act with the, whatever the work we undertake, right? So we should be able to deliver. We should be able to deliver, right? In simple terms, professional accountant should not undertake tasks for which he has sufficient specific, should only undertake tasks for which he has sufficient specific training or experience. Now, so being a chartered accountant does not mean that, being an accountant doesn't mean that he knows each and every thing. So therefore, what this particular is, you undertake, right, only thing that you really know, the only thing, that you are really comfortable, right. But again, so there again is an issue in the business organization. Whenever they recruit an accountant, chartered accountant, generally the employee expect the particular chartered accountant to do each and everything, right. So each and every, for example, maybe the tax, maybe the accounting, maybe the, say for example, internal control, everything, right. So there what he says is, if you don't have the required expertise, right, you should not undertake it. But again, there's a conflict, So they want you to do everything, but again, if you don't have the required expertise, what the code says, don't undertake it. So therefore, how to resolve? There's a conflict, right? That's what I'm saying, Then the financial interests. Financial interests are considered as self-interest, threat to objectivity and confidentiality. In particular, the temptation to manipulate price-sensitive information in order to gain financially stress, right? I think this I earlier also explained you all, right? What happens is the accountant or the particular CFO can be having some financial interest in the particular organization. For example, I am a shareholder of that organization. I want a higher profit, right? I want a higher profit. When the higher profit, share price goes up, right? And then I'll be benefited. So therefore, the financial interest will also result in the particular accountant find it difficult to work based on the ethical framework. Finally, inducement. Ethical guidance highlights the possibility that accountants may be offered inducement to influence the actions or the decisions, encourage illegal behavior, or obtain confidential information. What does it mean? Right? What happens is the accountant might be offered, for example, say the promotion, right, or a new motor car, or for example, new higher salary, right. So kind of the benefits can be offered basically to ensure that, or to influence him in his actions or the decisions, right. So can influence, for example, he is offered some benefits to ensure that he agree with whatever suggested by the particular person, right, or whatever suggested by the managing director, whatever suggested by the the owner of the particular organization. So therefore, things like this can happen, right, so that if the accountant's duty, right, so the accountant's objectivity is at or the accountant's ability to comply with the relevant ethical principles will be at a risk in a scenario like this. So therefore, these are some of the examples I just thought of giving you all, right, for you all to get an idea, right, that not only the accountants in practice, accountants in business also are basically having they also have issues on this one. Okay, now there is a small question. Can you all quickly read this? What it is? What are the ethical issues involved in this? Independence. Familiarity. Huh? Self-review. That's a question for accountant in business. Accountant in business now, so you are accountant, right? Finance director say that, okay, so your friend is working there, right? So tell him and get him some information, but don't tell him that, we are going to acquire. That's why he says, keep it as a secret. So you know that your friend is working there, right? Tell him and get the information possible, but don't tell him the fact that, so we are going to acquire. Advocacy, how? Okay, any other, some of you all said again independence, yeah? Intimidation, how? Okay. Any other question? You all have got used to the always firm one. No? I just gave you just to see whether you know other side of the story. Just so these kind of ones also possible, right? You might ask, that's why I gave you all the the framework earlier, right? How it works, and now the question. So what do you think? Any other answers? What do you think? Intimidation. Others? Right? Now, what I think, right? You all might be right, So what I think is, okay, now there is a conflict of interest, right? Because finance director wants you to keep it as a secret. Now, if the finance director says that, okay, so there's no, if we say that, okay, you speak to your friend, right, and get some information, right, and, there's no harm in telling him the fact that, we are going to acquire. If he is giving the information to you, right, that is his problem, right, because then as far as you are concerned, there's no issue, no, right? Because now finance director wanted you to get some information, you contact your friend and tell him that you are going to acquire that entity and give some information. If he is giving you the information after telling him that, you are going to acquire that entity, so the particular accountant is not having any issue as such. The issue is with then the accountant or the supplier of giving the confidential information, right? So therefore, now there is the issue here, but I felt, okay, there's a conflict of interest, right, where now, so you basically get some information from your friend, right, without telling him the fact that, right, your organization is going to acquire the particular other organization, right. So therefore, because the finance director wants you to keep it, there's a conflict of interest. Between the two parties, basically the particular accountant is concerned, then the FD is asking you to deceive your friend, right? So deception is an unprofessional behavior, that is not accepted by an accountant, no, right? So therefore, it's an unprofessional deception. You are going to deceive this one because you are telling him, you are not, without telling him you are getting the information from him. Third one, what I felt was, okay, the request to break your own ethical guideline constitute unprofessional behavior by the finance director himself. When a finance director telling, you are tell your friend and get the information, but don't tell him, right? Now I'm asking you to do that, so the finance director, he himself violating his own ethics. So therefore, if necessary, now he asked that particular question that day, whether you can report that to the that particular institute, right? Probably you can, right? Because he is asking you to breach your own, the ethics. So therefore, now, so these are the ones that I felt that, so the involved here. But again, what you all said, intimidation, what I felt was intimidation is also part of this one. Because if you don't do that, what will happen is, right? But again, there is a possibility where you might lose your employment, right? But independence, I am not sure whether there is an independence issue here, right? Now, some people said that independence. Now, is there an independent issue here? There is no independent issue, right? So, others are concerned, but I can look, there is a conflict of interest with, here, right? So, without telling him and taking, there is no conflict, right? There is no conflict, but you are telling him, you are not telling him that you are going to acquire, right? And second one is this unprofessional behavior, right? Doing that, and third one is this one. But intimidation is also, part of it, because, right? If you don't do that, what will happen is you might lose. But none of the other, but what you said, what you said, how do you elaborate it some more? Yeah. Okay. Yeah, there is a, what you are saying is correct, there is a remote this thing, if that happens in the, if that is a bad company, if so many other things are basically the yes, that context, but there is a very remote this thing, but so these are the ones, but intimidation is the main one, other than this one, that will have a main impact here. Okay, so this I explained you all last week as well, especially when you are dealing with, the ethical issues, right? Or the ethical dilemma, especially in the accountants in business, right? Accountant in business, how to deal with them, right? So that we discussed last week as well. You analyze the situation, identify the ethical issue, connected with that one, and then consider alternative options available as to how to resolve it, right? And then you identify the best course of action based on the steps above, and justify your recommendation. This is for our information, but examination, the examiner won't ask like this. But again, in recommending something, in recommending somebody how to address it, knowing this will be quite useful. Gather the information as much as possible, right? Analyze the situation. You analyze the situation, and then identify once you analyze the information, you identify the ethical issue connected with it, right? Identify the ethical issue connected with it, right? And consider, once you identify the issue, then identify the options or alternatives available for you as to how to address it. And finally, you, out of all the alternatives available, you identify the best course of action, right? Best course of action available for you. Finally, you justify your recommendations as to why you took that particular decision, right? Now, especially in the corporate world, now the scenario like the one I gave you all previously, right, can be given for the accountant might experience. Now, for example, if you all analyze the previous one based on this, how do you all resolve that particular issue? Now, this is the process we got to follow in resolving the issues, right? If we analyze the same the information that were given earlier, how do you all address the issue? If you all evaluate it, or if you all resolve it based on this framework, Now these are the facts, I mean, these are the things what we should know, right? Especially application of your knowledge. Now there is a process, right? Now I have given you some facts, right? I am asking you to resolve the particular issue by using this particular framework. How to use it or how to address it. Now I gathered the information of the first one, right? Analyze the information. Information is available, right? Identify the ethical issues or intimidation or the conflict of interest or whatever it is. Now we have already identified. Third one is considering the alternative options available. Now what are the alternative options available here? Huh? Okay, others? Now this is a very simple exercise. I mean, you know, for example, I will tell you one, right? One option available is, for example, the easiest one, right? The accountant can say that, okay, no sir, I can't do this, right? I can't do this. Easiest way, right? Because it violates the, you know, say the code of ethics or the ethical principles, right? So I can't do that. Now the first one is, what he can do is, he can say that I can't do it because it violates ethical principles. Second option available is, so he will say that, okay sir, I will do that, but I will tell my friend, right? I will tell my friend the fact that we are going to acquire, you know, your organization, we need this information from you, right, for this particular purpose. Right. First one is straight away you can say that, okay, so I can't do that. Second one, you can say that, okay, so now there is a small issue about the ethics, right? I have to comply with the ethical principles and all that. So therefore, what I will do is, I will speak to him, right? I will tell him the fact that, you know, so we need this information for acquisition of your entity, right? And then, you know, so we will get the information and give it to you, right? Now in this particular case, I feel that there are only those are the two options available here. Are there any other options available here? Right. That is for him, no. I forget about him. Where my earlier was it. So for him, you know, for example, where after informing him or before informing him, if he is willing to give you the information, right? That is his problem, right? Now we are going to address this accountant of our company, you know, or for example me, right, or us, right? So that one comes, you know, as a separate issue, right? Are there any other, you know, the options you all think that is available? Yeah, so that's another option. For example, is that okay? So why do we go by the accountant? We straight away write to them and, you know, so get the information. If you are going to officially, I mean, if you are going to acquire it, right, probably better to do a proper due diligence, and we'll tell them that, okay, so we intend of acquiring and want to do a due diligence and provide the information, you write to them and get the information. Another option, right? So likewise, first thing is to gather the information and analyze identify the ethical issues involved, and then identify the alternative options available. So like this. So therefore now exam also, the examiner will give you all the incident like this, right? And then follow the framework and then see, and then state the best course of action based on the steps above. Now you all will have to then take a call, what is the step you all are going to take? What action will you all take? What is the most appropriate out of all these, you know, what we discussed? Yeah, write to them, and, you know, this one, write to the officially to the company, right? And then this thing, for example, but if it is a listed company, right, we are going to buy the shares on the market, that might not be possible, right? Might not be possible. In that case, if that is the case, the answer will have to be the second one which I told you all, right? Maybe, so I'll tell him that I will get the information, but I'll inform my friend. I'll inform my friend that we need this information simply to acquire your entity, right? We intend in acquiring your company. We need this information simply because we want to acquire you. So therefore, that kind of an arrangement is acceptable. That kind of an arrangement is acceptable. So therefore, so identify a scenario, follow this particular framework, and then ensure that, you know, now another question, but here I just gave you all this one here itself, right? Name 2 ethical reasons why an auditor, right? Here I relate the ethical principle with the acceptance, right? Acceptance of an assignment. Name 2 ethical reasons why an auditor might not seek re-election or a reappointment, right? And might resign from an audit, right? 2 reasons why auditor might not seek for re-election or a reappointment, right? Or resign from the audit, right? Now the first one, the fee level, independent. What does it mean? I didn't explain it. I just, you know, recorded it. Fee level or the independence. How can that come into play? Fee level or the independence? Reappointment. Think about, you know, questions of this particular nature also, because ethics you can relate with some other aspects also, right? Now what happens is, now for example, you are going to be reappointed, right? Now as far as the proposed fee for the next financial period is concerned, now so they have offered you reappointment for the next term or the next year. Now as far as the reappointment is concerned, right, proposed fee for the next term, right, for example, comes about 20% of your total fee income for the next year, right? As you know, during the current period or this period, you know, you have lost fairly big number of audits, and in this particular audit, the fee was substantially increased. As a result, from your proposed fee income for the next year, the income of this particular assignment comes about 20% or a 15%. So if that is the case, right, your independence is at a risk, right? So therefore, you know, the auditor will, you know, not seek reappointment. Auditor will reject reappointment, say that, okay, look here, if I undertake this particular audit, now the income I will be getting from this audit amounts to a 25% of my fee income, or a 30% of my fee income, or a 15% of fee income. Then you are not independent. So therefore, on that particular basis, okay, that is the one scenario where auditor will basically reject reappointment. Second one, integrity of the management. What does it mean? If audit has a doubt about the integrity of the management, right? So audit has a serious doubt about the integrity of the management, he might say that, okay, I don't wish to. So now there are plenty of examples in practice in our context also, right? So auditor might say that, okay, I don't want to be reappointed for the audit, right? Third one, other services offered. What does it mean? Okay. Yes, what he said is exactly this one, because for example, other services may have been offered, right? Other services may have been offered like management consultancy, For example, some non-assurance services. Some non-assurance services may have been offered for the auditor by the management. For example, management consultancy, right? Now, if the auditor undertake the management consultancy or the non-assurance work, right? Now, he get involved in the decision making process. If he get involved in the decision making process, if he undertake the management consultancy and audit both, he is subject to self-review because he is taking the decisions, right? Ultimately, those are ultimately will be reflected in the audit, the financial statement. Now, he is going to audit the same financial statement. So, therefore, now he is subject to self-review threat. So, in that case, what happens is, or what will happen is, now the auditor will consider if the income he is going to get from the management consultancy income or a management consultancy assignment is higher than the income he is getting from the external audit or the statutory audit. So, auditor might not opt to this one reappointment as auditors. Instead, but he will say that, okay, so look here, now you all get somebody else to do the external audit. I'll continue as a management consultant, because you are getting the income you are getting from the management consultants is much higher than the income from the audit. So, therefore, so because otherwise, if you undertake both, you have a self-review threat. It can be valuation, or it can be management consultancy, it can be, for example, accounting, can be any other assignment where ultimately, right. So, if you are going to review the work you have done, you are subject to self-review threat. Therefore, what you got to do is, your auditor got to take a call, which is more profitable, right. Auditor will say, for example, if management consulting the non-assurance work is more profitable, he will take it, right, and leave other services for some other auditor. So, therefore, these are three circumstances, right. Now, in this particular example I have given, right, I have relate, for example, auditor's appointment with the ethics, right, can be linked, right. So, where the examiner can question on that one. Okay. So, those are the basically the matters pertaining to ethics. I thought that I felt that so we should discuss with you all, right. So, therefore, please ensure that so because this appears to be a very important topic, and there has been a sort of a significant increase in the number of marks allocated as well. Traditionally, it has been 10 marks, and you all have been always tested on the ethics applicable for accountants in practice, right. But now understand that there is a possibility where the way questions have been asked and the mark allocation, possibility where the mark allocation can be increased, right. For example, last year it was 12 and this year it can be 15, right. So, likewise, and the accountants in business can also be linked into this one. So, because that aspect is really important, because fairly large number of members of ours are working in the corporate sector, the corporate world. They are also encountering a lot of ethical issues in their work. So, therefore, that can be tested. So, and what matters mostly, what is most important is, now we discuss the framework, no. If a scenario is given, right, analyze it based on that particular framework, ultimately suggest, address or handle it in this particular form, right. So, these are the options available, right. They are the most suitable option, and address or handle it in that particular context is really important, right. Okay, this one I thought of taking you all through this particular one also, because this specifically relate to the question number 1, right. The question number 1, most of the time part 1 or the part 2, examiner is giving all a scenario, or examiner has been giving all a scenario where at the end of it, examiner goes on to tell us tell us that identify the significant risk in this audit, right. Now, the significant risk basically refers to, right, those that require special attention or special consideration in the audit. Here I have summarized, right. The following factors indicate that a significant risk might, risk might be significant, right. Few circumstances, I just identified, where you all can conclude, or auditor will conclude that the the risk involved is significant, right. Now, in identify, what happens is most of the time what I have heard, what the students have been doing is, now if a set of financial statement is given, right, last year income 10,000 million, this year 12,000 million, all it becomes almost significant risk, right. So, therefore, it might not be the case, right. For example, last year the company was operating with 2 factories, now the year before it was 2 factories, this year it has gone up to, they have increased to 3 factories, and the demand for their product might have been increased. And when you gather the knowledge, the information about the knowledge of the business, you identify all that it was 2 factories, now gone up to 3 factories, demand for the product has increased. If all that information is there to substantiate the increase in the turnover, might not, that particular increase in the turnover need not be considered as the item that requires special attention. Because the factors or the information is there for you, they are available for you, right, to justify that why it has gone up from 10,000 to 12,000. So, therefore, now what matters will have to be considered as the significant, basically these, right. If the information given indicate that there is a risk of a fraud, the degree of subjectivity in the financial information, unusual transactions, significant transaction with related party, and complexity of transaction. If you look at the last 2, for example, papers given, right. So, there are many instances where lot of complex transactions were given, right. Lot of complex transactions were given, and there were many indications about the risk of fraud. And the degree of subjectivity in the subjectivity in the financial information. For example, I think the last year first 2013 December paper, right. There's a question on, I mean there's a information given on the pawning, right. Pawning, and the big provision will have to, I mean it didn't say that if I can remember correct, it did not say that the provision need to be increased and all that. But again, the information was given that out of their portfolio, significant portion is relating to pawning, right. But we were well aware of the fact that there was an issue on the pawning, right. So, therefore, now there was an issue about, there was a concern about the numbers shown in the financial statement on receivables, loans and advances, right. So, therefore, the degree of subjectivity in the financial information, degree of the subjectivity, whether the loan loss provision given or whether the loans and advances shown in the financial statement are accurate, right. So, likewise, generally, these are the factors in a given scenario you can consider being the area that requires special attention or the significant risk. If there is a risk of fraud, degree of subjectivity in the financial information, unusual transactions, significant transaction related parties, and complexity of transaction. Now, we all know that examiner is generally giving you all the financial information for the last 2 years, and thereafter examiner will give you all maybe another 2-3 paragraphs of information. And now in this the information given, so if there are indication about a risk of a fraud, if there is an indication about a complex transactions, right. For example, it can be hedging, it can be for example some derivative something, right. So, if there are some indication about the complex transactions, right, and if there are some transactions, if there are some information given about the significant transactions with a related party, right. Now, those can be identified as special areas or areas that require special attention in your audit. And then I thought of giving you all few examples, because as I explained you all on the first day, what happens is most of the time, right, sometimes the students identify the significant areas. So, but they don't come up with the appropriate responses, the appropriate procedures to address the risk identified. They come up with there's some procedures, but they might not be the appropriate. They might not be the appropriate the procedures to address the risk identified. Now here I just identified based on the say some information given, I say that the risk is risk that inventory has a lower net realizable value than cost and is therefore overstated. Now based on the information given, you have the view that, right. So auditor is the view that, now examiner has given a lot of information about the saleability of the inventories and etc., right. So therefore now you conclude that there is a risk that inventory has a lower net realizable value. So based on the information given, you feel that inventory has a lower net realizable value compared to the cost. So therefore, what you are saying is inventory's NRV is overstated. Sorry, the inventory is overstated in the statement of financial position because NRV is lower than the cost. So therefore, the inventory is carried at cost in the financial statement. Therefore, there is a possibility where inventory is overstated. So if that is the case, there are plenty of audit procedures you can perform. Most of the time, examiner is asking only, for example, 2 or 3 audit procedures. So here, whatever they are also highlighting, identify the most appropriate audit procedures. Even though there can be 100, identify the most appropriate. Now here, I have given 2 most appropriate audit procedures. One is ascertain the sales value of the item sold in the subsequent period. Now, if you want to see whether the NRV is lower than the cost, now we will have to see what is the actual NRV, right. Now, when you check the subsequent period sales after the balance sheet date, you take the subsequent period sales. When you check the subsequent period sales, you can identify, so what was the NRV, what was the NRV of the inventories you had on 31st March, right, and then you can compare that with the cost. So if the NRV is lower than the cost, then obviously, because you have the the first hand information with you, you have the cost and you have the NRV, the price at which those items are sold in the subsequent period. Based on that, you can see or you can check whether the value shown in the financial statement on account of inventory is the correct or is as stated the right price. Second one, increase the emphasis on the age analysis of the inventories held as of the balance sheet date. So whenever you, in your the test, right, or substantive procedures or whatever it is, so you focus or you give more attention on the age analysis of the receivables, because when you get the age analysis, you will be able to identify the inventory that has been there for quite a long period in your organization. So the inventories that has been there for quite a longer period is there in your business. There is a possibility where those, as far as those inventories are concerned, NRV can be quite lower than the cost, right. For example, those have been there for quite a long period in your business, might not be in a saleable condition, right. So might be obsolete or might have been damaged, right, or the might have been for example, technically obsolete, right. So therefore, when you take an age analysis of the inventories, you will be able to identify the obsolete inventories or the inventories, so of inventories of which the NRV is lower than the cost. So therefore, now here I am saying that okay, give more focus on the age analysis of the inventories. So if there are inventories which has been there for quite a long period, carefully check the subsequent, the sales, right, subsequent selling prices, and then see, whether those are shown at the right price. And then I take another one. The another risk is, second one identified based on the information given, I say that increased risk of bad debt. Now, as an example, a lot of information is given, I conclude that there is an increased risk of bad debts, right. If that is the case, now so audit procedures. There are plenty of audit procedures you can perform, but I have written more suitable, most appropriate audit procedures, right. First one is check the subsequent cash collection of the receivables, right. One is okay, you check the subsequent collection of the receivables. Second one is you review age analysis of the receivables and customer correspondence files for evidence of disputes and consider the adequacy of the receivables allowance. Similar to the first one in this particular case, first what you do is check the subsequent realization. Check the subsequent realization. Second one is, so what you simply do is you take an age analysis of the receivables. So where you can identify the debts that have been outstanding beyond the credit period given. When you get an age analysis, you will be able to easily identify the debts outstanding beyond the credit period. And then what you do is you go through the correspondence files with the customers. When you go through the correspondence files with the customers, you will be able to identify. So if there is any dispute between the organization and the customers, right, you will be able to identify them by going through the correspondence files with the customers. So therefore, so when you do that age analysis, you give more attention on the debts outstanding beyond the credit period, go through the correspondence files and identify disputes if any between the organization and the customers, and then give more focus on assessing whether the allowance stated there on account of the collections not receivables, or the receivables, the not recoverable is adequate, right. So therefore, these appears to be say two most important procedures. So you go to perform in respect of third one, right. Third one, so what I felt, okay, significant client borrowing and overdraft with cash flow problem. I have noted that there has been a significant borrowings, right. Your client's borrowing has been significantly increasing, right, and you know the overdraft has been increasing, and the client is experiencing cash flow problem. Now, so examiner has given some information where you can identify, right, the significant borrowings are there, and you know the overdraft increasing and cash flow problems, and you know then review correspondence with the bank lender for any evidence of withdrawal or extension of facilities, whether the bank has withdrawn the facilities given or extended the facilities given, right. In both circumstances might indicate a going concern issue, right. So significant cash flow problems, right, with you know the increased borrowings and all that. Review subsequent period result and cash flow forecast for evidence that the company can continue as going concern. In this type of scenario, the more focus will have to be given to see, you go through the subsequent information there again. For example, by the time the audit is done, subsequent period 3 months might be over, or a 6 months operation might be over. So therefore collect the 3 months or the 6 months information and see, right. So if there is an improvement compared with the previous period, if there is an improvement, might not be an issue. But if even in the subsequent period, so if their turnover has been declining, profit has been declining, or still they are experiencing cash flow difficulties, that might indicate that this organization is having, or organization will be having a going concern problem. So therefore, now as a true audit procedure, that will be really important. So the final one, the client has introduced new system, new controls, or the recruited new staff, so which will have an impact on amount recorded in the financial statement. It says, okay, client has recruited new employees, have introduced a new ERP system, right, or the new controls during the particular financial period. So now those controls or those ERP system will have a significant impact on the financial statements, or the numbers shown in the financial statement. So therefore, in this kind of a scenario, we are going to perform extra work on new systems, controls, performing test of controls when necessary, because now you are going to audit a system or a new system control which was not audited before. So therefore, the more attention or more focus will have to be given on those controls in the current financial, because you have never seen them before, you have never looked at them before. So therefore, what is more appropriate and relevant is, okay, so go through, right, take an additional time, additional effort in going through studying the new system, studying the new controls, and if appropriate, you know, perform more test of controls. Now you identify the control and then perform the test of control to see whether those controls are actually implemented well, whether employees are basically following them. And the increased sample size for substantive testing over financial statement areas affected. You know, as far as substantive tests are concerned, now you know that, okay, sales might have been affected because sales is now, process is fully automated, right. Revenue, sorry, the payments fully automated. Therefore, if you feel that, you know, the revenue might be affected or the PP might be affected, what you can do is, you can increase the sample size for the substantive procedures for those items concerned. Therefore, now here actually what I thought of, you know, highlighting this for you all to, once a risk is identified, this is a big first question, no? Like I explained you all right at the beginning. So if you all can get about 20-25 marks for the first question, your ability to get through the examination is very high. Because out of 35, you straight away get 25, another 25 from the balance 4 questions, right. So and this is one of the main, you know, the question being asked, you know, in the question number 1. Either first question number 1, one aspect is identify the risk areas, second one is propose 2 audit procedures for each and every risk item you identify. Now all this time the examiner's report I was reading, what it says is, Now they have identified the risk, but the procedures given were not appropriate. Procedures given were not correct. So therefore, now just wanted to highlight, some of the appropriate procedures. Not that, most of the time students say perform appropriate controls, perform proper tests, do proper testing likewise. Proper doesn't have a meaning as such, right? So therefore, now just identify exactly what is the exact procedure you got to perform to address a particular issue, right? So without, you all might take your time and write 10 procedures, but all 10 procedures you all have written might not address the risk being identified. So therefore, take your time and think what is the most appropriate procedure that will address the risk being identified, right? For example, inventory NRV is lower. The inventory NRV is lower. You all suspect that based on the information given. For example, you are selling some electronic appliance, some new, for example, you are selling a mobile phone, your client. Now the mobile phone the client is manufacturing and selling, now demand is coming down. Now new phone is there in the market. Examiner is selling, you all assume that a story like this. Your client is manufacturing, selling mobile phone, now you have a huge stock, 200 million worth of stocks, the costing stock in your balance sheet, and the demand for this particular product is coming down. And company is producing a new, very good, the new model, right? There's a massive demand for that kind of information the examiner is giving. If that is the case, if the examiner is giving you all that kind of an information, now you should be able to understand, okay, there's a risk, right? Risk is inventories NRV can be lower than the cost, because now if my demand for my model is coming down, the competitor's model is demand is going up at a rate, right? So there is a possibility where the demand for my product might have come down drastically. That is the case, NRV can be lower than the cost. If the NRV can be lower than the cost, how do we check that? So the most appropriate option available for us is subsequent period, because we are not going to do the audit on the 1st of April itself after 31st March, probably maybe after 2 weeks or after 1 month or after 2 months, right? If you will have the details of the subsequent sales, the particular product being sold, right, okay, collect the information pertaining to subsequent sales. Then you all will be able to identify what is the price at which those inventories were sold in the subsequent financial period. And then compare, okay, this is the NRV, this is the cost, then which one is lower? The lower value will have to be the value at which those items will have to be shown in the financial statement. So therefore, now that is one of the most appropriate procedure. And then, if the inventories are not sold in the subsequent period, you did your audit in the first week of April or second week of April, right? Most of the items are not sold. If that is the case, the most appropriate procedure, you get an age analysis. Get an age analysis, right? And then identify how long these inventories were there in the business, right? What is the expiry date, right? So is there a demand for this particular product? Can you actually sell them? Have they been damaged or they expired, right? So likewise, taking all that into consideration, identify what is the NRV. So therefore, come up with the appropriate audit procedures, right? If the examiner is asking 2 procedures, writing the 10 audit procedure which is of no use, right, might not attract the marks. So therefore, take that, the time you all, take to write 10 procedures to think about the most appropriate procedures and then write 2 procedures. Take little time and see, because examiner is not giving the mark if asking for 2 items. So even if you write 10 items, right, so you all get the same amount of marks. Just for example, 2 items, examiner is giving 4 marks. Even if you all write 10 items, you are getting only 4 marks. So therefore, without wasting time to write 10 the procedures, take little time and read, or sorry, take little time and understand, right, or take little time and think what are the most appropriate procedures, and then write them so that you all will be able to get the appropriate marks, right? Now, so that is into that, and then I thought of that again. Last week I explained you all about this, having auditors on expert. Having auditors on expert. Now there are certain circumstances where I said that the auditor will have to hire, or auditor will have to go for an auditor's own expert, right? Now in this particular case, I have given an example, right, where for you all to decide, right? Because I said that auditor will have to first decide whether the auditor's expert is really required, right? If required only, auditor will have to go for the expert. Right? I said that if the auditor, if the particular scenario, auditor doesn't know how to exactly, see whether number shows true and fair, your number is correct, auditor might go for a auditor's own expert. Therefore, auditor will have to first evaluate it. Now, this particular example, explain whether it's necessary to use an auditor's expert in the following circumstances. First one, the useful life of each oil platform is assessed annually on factors such as weather conditions and the period over which it is estimated that oil will be extracted. You are auditing useful life of the oil platform. Do you all think that you need the auditor's own expert? Yes. Any other answers? Yes, you know, there is a sense what you are saying. Any other answers? Do you all think the auditor's expert is required? In this particular case also. So what do you think? Anything? Now, the lifetime of oil platform is assessed annually on factors such as weather condition and the period over which it is estimated that the oil will be extracted. Now, to see whether check the accuracy of the weather condition, do we need expert, the opinion of an expert? For example, nowadays, those days we used to, if you all want to see the weather conditions here in Colombo, right, today or tomorrow, right, you all don't need to, we don't need to wait till the, the department release their announcement or get into the Google and so you can easily identify, right, you can easily get that information, right. So, as far as the weather forecast is concerned, right, if you all take first the weather forecast, do we really need an expert? Because that information is publicly now available, weather forecast is now publicly available, right. So, if it is done, one aspect of one aspect considered is weather forecast, whether to, check the weather forecast, you don't need an expert because you get into the Google, you can get that information, right. The second one, say the period over which it is estimated, right, whether and the period over which it is estimated that oil will be extracted. That one, do you really need an expert? On the face of it, now whenever we see that, we immediately feel that you really need one expert, right. But again, now it's like this, so there can be certain circumstances where, now for example, initially when it was they have started extracting oil, right. So there may have been certain estimations, no? There may have been certain estimations, right. So and for example, they might estimated from this platform they can extract, for example, 100,000 barrels of oil, right. So far, how many barrels, right, how many barrels they have extracted, right. Now, for example, they started this particular process in 2000, right. They estimated that 100 million barrels can be extracted, but so far now in 14 years time they have extracted, for example, 60 million barrels. 60 million barrels have extracted, now 40 more million barrels to be extracted from the particular platform, right. Now, based on the rate at which they have extracted oil, right, so it will take another, for example, 20 years, right, to extract the balance extract the balance 40 million. Now as you all know, now so there are two giant oil manufacturers in the world, right? Who are they? British Petroleum and yes, BP, and that main one. Now if you all take the, say, the BP and then Shell, right? If you all take the annual financial statement of theirs, they make a, if you all take an annual report, they make a disclosure, you know, so they are, because they are having, they own fairly large number of oil deposits, right? They own a fairly large number of oil platforms, right? So therefore they make a disclosure in their financial statement. They expect that, you know, whatever the platforms they are having, the oil will be there for a period of another 20 years, right? Oil will be there for another 20 years, right? So therefore they can extract the oil for another period of 20 years. If your client, if the, now, so you are estimating the useful life now. For example, if the Shell or the British Petroleum says that, okay, so based on theirs, you know, it will take another 20 years, right? So they can extract the oil for another 20-year period, right? Now in your clients also, right, their estimation is, you know, that the oil platform there is more or less similar, right? So the oil platform British Petroleum or a BP or the Shell or whatever the other entity is having, then do we really need to go for an auditor's expert? The fact that, you know, is oil platform, whenever you say that oil platform useful lifetime, no sooner we conclude that, okay, you need an expert, right? When you all immediately look at it, don't say that, you know, it's not that, you know, you need an expert. Now, for example, they have started in 2014, say 2000, right? They say that they have management has estimated 20 more years to go. And there are a couple of other companies also into the same business. So they are also into the same business, their deposits also more or less similar to this one. And they have disclosed in their financial statement based on experts' opinion, this and that, right? So where, you know, so they are also believing that another 20 more years they can go, right? On the other hand, you can get the information about the weather forecast from the Google, right? Or from the internet and whatever it is, right? So there, that is the case. I mean, the fact that it is oil platform and the oil and, you know, how long it takes doesn't mean that you should always go for your own expert, right? Now, for example, what he says is okay, makes sense. The management has got it done from a management own expert, right? So you can you can inquire from them, okay, how did you do this, right? If you feel that, okay, they will say that, okay, this is the mechanism I did it. You check with the BP or you check with the Shells or you check with Helix, right? And you check that, that's the same period. Because we all believe that, we all use in the same mechanism and believe that it is the same this thing. So we feel that, you know, it will last for another 20 years. So therefore don't, on the face of it, don't conclude that, you know, it's the same, right? There can be other ways and means, right? This, you know, not a typical this thing, right? Ways and means of available for the auditor, right? To get the required information to see that his own expertise really required. Second one, right? Piles of copper and brass that can be distinguished with a simple acid test have been mixed up. You know, so you are going for inventory verification, you are attending the inventory count, right? What has happened is, right? So this the copper and brass have been mixed up. Do we need an expert's, you know, this thing to determine the value? Yes or no? Any other these things? If you look at this, if you read this, what it says is, can be distinguished with a simple acid test. You can separate it from a simple test. You can separate from a simple test. Do you need an expert to do that? Right? It's not really required. Isn't it? When you see that copper and brass mixed up, we really feel that when you see the first sentence, we really feel that expert is really required. Earlier when we saw that oil, platform and economic lifetime, we felt that okay, expert is really required, right? So might not be the case. So therefore, consider basically the other options available, so that we'll be able to see, right, whether it's really required. In that particular case, not that I was asking whether what aspect you got to consider in auditors, expert. Now we all know that his qualification, his expert, the experience, his scope, and all that. Those are the normal things what you all know. Therefore, I thought of taking a different question for you all to answer. The last one, you are the auditor of Good Luck PLC, which has subsidiaries in UK and USA, many of which are audited by other firms. Explain the principal audit procedure you will carry out in respect of the components audited by another auditor. This is, I think, kind of a question that we discussed last week also. But all those procedures, I mean, there are plenty of procedures that we discussed, right? Can be broadly divided into two, right? Or two or three, right? Now, this is what happens in most of the time, right? Where the principal auditor send a questionnaire to all other auditors in reviewing the component auditor's work. He send a questionnaire to the all component auditors, right? Which should include the question, right? Now the principal auditor is asking, right, from the component auditor, explanation of their general approach. You are asking from the component auditor, what is your general approach, right? Just to see whether the component auditor's approach is acceptable to the principal auditor, right? Second one, details of the accounting policies. Now, if you all can remember last week, I mean the last Saturday or the last Friday, I said that accounting framework will have to be the same. If accounting framework is different, different adjustment might be required. So therefore, now you are asking, because the separate auditor is doing, you are asking from the component auditor, what is the accounting framework, right? Or what is the accounting policies you are using, or the component auditor is using in preparing the financial statement. Third one, component auditor's opinion on the subsidiary's overall level of internal control and the reliability of their accounting records. You are asking from the component auditor. So what is your conclusion on the internal control of the component, right? Internal control of the component and the reliability of the accounting records, right? Whether the accounting record, whether you can rely on the accounting records. The fourth one, any limitation placed on the scope of work, whether any limitation was placed on your work, right? And finally, any modifications and reasons for them, whether the report was modified by you all, right? And if it was modified, the reasons, what were the reasons for your modifications. Likewise, one aspect, auditor is writing to the principal auditor, is writing to the component auditor, asking some clarifications or asking some information. So this is in general the information the component auditor will ask from the, principal auditor will ask from the component auditor. Tell us, your approach. Tell us whether what are the accounting policies used by the component. So likewise, these can be some questions asked by the principal auditor. Second one, right? Now this is, I don't know to what extent, generally the auditing standard also, very specifically says that, but again, to what extent is practical, right? Carry out a detailed review of the component auditor's working papers on each subsidiary whose results are material to the group financial statement. Now, that means components are audited by the component, or subsidiaries are audited by the component auditor. You get hold of the files of the component auditor and you review those files, and then so you have to see whether the material is computed correct, whether the all work is done, whether work done is documented, right, and all the normal procedures, right. So whether the work done is documented, appropriate, and etc. So will have to be checked or will be checked in the component auditor's working paper file. So therefore, now this is one other procedure. There are plenty of others. Under, if you will take this one, second one, under second one you can bring another 20 procedures, right. whether he has computed the materiality correct, whether all work done is documented, right? Whether the internal control have been, whether the systems have been identified and documented, whether the test of control is done. Likewise, so this can be again subdivided into many smaller points, right? But I don't want to do that, so since you all know all that about, all about those, right? And then the consolidation process, I didn't record it here because consolidation process, and then whether the transactions have been, the financial statement have been translated by using the appropriate race. Likewise, those can be discussed, or those can be considered, especially in your audit of group financial statements, right? So, okay, those were basically the things I thought of discussing with you all today, right? And if you all have any questions, or if you all need any clarifications, right? So now, so we can discuss. Yeah, so we'll get them to yes upload. Yeah. That is what earlier, so I also explained you all. Yeah, yes, because one team does this one, right? Because in small audits, that can happen because one partner take the, because then self-review threat will not basically arise because one partner does handle the accounting work, different team handle the assurance work. Yeah, yeah, that is this one, yeah, acceptable. Yeah. 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 All right. Okay. That I think that first day itself I did that. Now, as I said, first question always test about. Always, if you all take the last 5-6 papers, about 8 to 10 accounting standards have been always tested, right? The accounting issue always become an audit issue, right? So in that particular context, I said that some accounting standards are really important and have been regularly tested, right? So the first one is, I said that okay, financial instrument standard, because based on the classification of the financial asset and financial liabilities, measurement changes, and where you got to make adjustment, whether it be income statement or the other comprehensive income, right? So those changes, right? Second one, I said that the impairment standard, right? Impairment standard regularly being tested, right? And then the revenue, I said the revenue, right? A revenue standard regularly being tested, and there are a lot of the issues referred to the institute also. And then I said that the leasing standard. Leasing, right? So leasing standard, right? And then said that a PPE, property, plant and equipment, deferred tax, and then intangible assets, right? Intangible assets. So those are basically the standard I think, so I believe that is really important in today's context, because matters pertaining to those, there are a lot of issues pertaining to those standards refer to the institute, in most of the time for clarifications and etc. etc. Especially take the revenue standard and the leasing standard. Now some of these standards are going to be changed in another 2 to 3 years down the line. So therefore, especially take the leasing, right, and revenue, right. So both are going to be changed. So therefore, a lot of issues are there pertaining to those standards. So therefore, there is a possibility where those will be tested heavily, right. PPE, right, and intangible assets, right. And so I forgot one other important standard, related party transactions. related party transactions. Huh? Yeah. And one other thing, what I was early also highlighting you all, that systems and because always now the last two paper, the examiner has given you all this one, a given system is being given and you all were required to evaluate it and see evaluate and identify the deficiencies in it, right? And then come up with propose the controls to address the deficiency. So therefore, I said that this has been heavily tested, right? Last two examinations especially heavily tested. Therefore, there is a very strong possibility. I mean, there is no, it depends on the scenario given. Therefore, there is no way that I can bring something here and discuss, because if I am to bring something here and discuss, it has to be another question, right? Because actually I have a couple of questions, but again putting it here and then taking you all through that one going through the question itself require a lot of time, right? Therefore, I didn't take that one on today. Say take few scenarios and identify, go through it. Now for example, the last year December question, the examiner had given information about NGO, right? How the cash is collected, how the receipts are issued, how the cash is deposited and all that. Whenever you evaluate it, now normally what we do is what could go wrong, right? You identify if this particular process is followed in this particular manner, what could go wrong in this system, right? So once if it is something, if something can go wrong, right, that means there is an issue. So therefore, you identify that being an issue of that particular the system, and then you got to come up with a control to address the particular issue, right? Okay, there is an issue like this. You introduce this particular control to address the particular issue you have identified. You have identified a risk or an issue and introduce a control to address the issue identified or to mitigate the particular issue identified, right? So therefore, actually since last two examination continuously this is being tested, right? Is really worthwhile for you all to sort of go through few questions in this particular area, especially, right, whether it be Cap 2 level is okay, because the requirement, because last two Cap 2 level last few papers if you all take, there were few questions, maybe ACC papers, or the objective is for you all to be familiar with, right? For example, especially those who are into the audit sector might have an experience in evaluating client systems quite a lot. But if you will take, that those people into the industry might not have that particular experience. Those who are basically completing their training in the non-audit sector might not have that particular experience. So therefore, whether it be Cap 2 level or ACC or any other examination is not a concern, right? So if you all have a concern, now first of all, you all get the scenario and you all read, and then you all try to figure out what are the the control deficiencies in this one, and then what you all propose to address the deficiencies, and thereafter you all can take a call. Thereafter what you all can do is you all can take the examiner's answer and then can compare and see whether your answer is whether answer you all have compiled or you all have written is accurate or good enough, right? So therefore, that area I can I can say that when I see this is going to be really important, right? So it depends on because I could have come and discuss the internal control standard here, internal control auditing standard, some internal control theory here. But discussing internal control theory is of no use, because the examiner won't ask any theory about the internal controls here. What will be tested you all on application of the control, right? So the scenario will be given and you all will be required to identify the issue there, and then introduce the control necessary to address a particular issue. So therefore, the internal control will be quite based on the information given questionable. So therefore, go through that one as well. So some Cap 2, these ones are also there. Some good Cap 2 papers are also there, right? Past papers, right? Just take, just for you all to start. It won't take much time for you all to take and then get an idea. Okay, then with that we'll stop for today, right? So thank you.